Welcome to this Spokane and Coeur d'Alene housing market update. It's November 2024. In this video, I'm going to bring you the information that you need to know about the national as well as local housing market so that you're armed with the facts that you need when it comes to making a decision. And this video is particularly important because while everyone's been distracted by the election, the housing market has been ticking along and some important things have been going on you need to know about. My name is Phil Wells. I'm a real estate agent licensed in Washington and Idaho who likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we'll start by getting a national picture of what's been going on. We're going to look at pending home sales, mortgage rates, mortgage application rates. We'll look at the national median home price, what's going on with inventory, and how long homes are staying on the market nationally. We'll then compare and contrast that national picture to the local picture in Spokane and Coeur d'Alene. Before we get going, go and follow me on Instagram. That's where I'm most active throughout the month. I post important housing updates as well as articles there as well. So let's get into it. Looking first at the most recent data that we have for pending home sales, which, due to a lag in national data, details sales volume in September. Contract signings were up 7.4% on a month-over-month basis in September, which is a large improvement and not what you would expect on a month-on-month basis as we leave the busy summer selling season and the schools go back as well. Year over year shows contract signings were up a healthy 2.6%. As you can see from this graph, this marks the most positive year over year increase we've seen this year. So a very positive month all round there when it comes to pending home sales in September. Here's what the National Association of Realtors chief economist had to say about September's pending home sales. Contract signings rose across all regions of the country as buyers took advantage of a combination of lower mortgage rates in late summer and more inventory choices. After 2 years of sluggish home sales in 2023 and 2024, existing home sales are forecast to rise. This next part is interesting. During the next 2 years, expect a slower rate of growth in home prices that's roughly in line with the consumer price index because of additional supply reaching the market. If you're a buyer, that looks like good news. Prices beginning to level off and more inventory. That means you can maintain your budget and likely connect with the home that you want to connect with. Keep an eye on prices though if you're a seller. Buried at the bottom of this article is some big news that we need to look at as well. This economist predicts the 30-year fixed mortgage rate will slide to 5.9% in 2025 and then move higher to 6.1% in 2026. So lower mortgage rates are on the horizon. Let's stay with mortgages then and take a deep dive into what's been happening. Sticking with September for a second, and know that we are looking at the 30-year conventional mortgage here, which is of course the most popular mortgage product out there. Mortgage rates at the start of September were 6.4%, and following a run down to near 6%, they finished September at 6.24%. So positive market conditions in terms of mortgage rates for those that were in the market in early September there. That certainly goes some way to explaining the run up in terms of pending home sales that we saw in September as well. With some people locking in rates as low as 6%, those were some of the lowest mortgage rates I've seen for years. Today's rates have since risen and are now at 6.92%. So very frustrating current market conditions, particularly if you entered the market because of low interest rates, got pre-approved, and have now found yourself priced out the market once more. We have seen the Federal Reserve cut its base funds rate 0.75% recently, but those cuts don't seem to have made any real impact on mortgage rates. In fact, mortgage rates have gone up. If you're interested in the relationship between the Fed funds rate and mortgage rates, take a look at this article. I'll leave a link to it in the description to this video. But essentially, while mortgage rates are somewhat influenced by the federal funds rate, because the whole economy is, mortgage rates are more closely tied to demand for government bonds. Unfortunately, those are the current market conditions when it comes to mortgage rates right now. And with a recent survey, we can see that 70% of home buyers are relying on a mortgage in some way, so we could assume that this is likely to have a negative impact on home sales. But we don't like to make assumptions on these market updates, we like to deal in facts, so let's move on and look at mortgage application rates and see what's going on in that space. Fortunately, the Mortgage Bankers Association publishes data weekly about how many people are applying for mortgages. So this gives us a really good up-to-date idea of what's going on with buyer demand. As we can see on this bar chart, in September when we had a dip in mortgage rates, this corresponded with more mortgage applications, as you'd expect. And as we saw from home sales in September, that resulted in a major uptick in sales. Well, since rates have increased once more, those applications have pulled back in a big way. And we can expect to see a pullback in sales when October's data comes out next month. Let's wrap up this national segment by looking at the national median home price, inventory, and days on market. National median home prices in September were $404,000, which is up 3% on a year-over-year basis. These prices aren't coming down. The chief economist at the National Association of Realtors said as much in the previous section that we covered. So if you're still trying to time the market and wait for the crash, I don't know what more you would want to see to tell you that that's not going to happen. Inventory is currently sat at a 4.3 month supply. That may not sound like much, but currently right now, the highest number of homes for 4 years are available to buy. And those homes are remaining on the market nationally for around 28 days. So let's summarize that national picture so we've got something to compare our local markets to. Pending home sales increased in September in a big way on a month-on-month basis, and we're up 2.6% on a year-over-year basis. Mortgage rates are up and are hovering around the 7% mark. Most recent mortgage applications show that applications are down. Home prices have risen 3% on a year-over-year basis and show no signs of declining anytime soon. Inventory is sat at a 4-year high, and homes are staying on the market around 4 weeks. Now let's look at the Spokane market and see how it compares to that national picture we just outlined. Just a note on Spokane's figures and also Coeur d'Alene's figures when we cover them, we are comparing national pending home sales from September with actual closed sales in October. Sales were up 12.2% year over year, which is substantially ahead of the rest of the nation's 2.6% increase. I've said it before and I'll say it again, whatever the rest of the nation is doing, Spokane is doing it, but just more. Next month, I predict there will be a national decline in terms of sales because mortgage rates went up, and I expect to see here in Spokane that decline exaggerated. It's just the way Spokane operates for some reason. It's nothing out of the ordinary for this market. Median home prices are ahead of the rest of the nation at $422,000, which is up 6.4% on a year-over-year basis. So Spokane largely shrugging off the rest of the nation's seasonal decline there. Inventory is substantially lower than the rest of the nation's inventory levels. We are at 2.7 months of supply here in Spokane. New listings are up 25.2% on a year-over-year basis. This has actually been great for me as a real estate agent. I've been matching clients with properties all month pretty successfully and getting some real home runs due to this increase in new listings. You can see days on market of 19 days. That's obviously lower than the rest of the nation's 28 days on market and is a positive sign for local sellers, knowing that they'll likely have a contract in around 3 weeks if they're priced appropriately. Sellers in this market should feel at ease knowing that their equity isn't declining. In fact, it's steadily increasing. I would still caution those waiting for top dollar for their home. Wait until mortgage rates have that 5 handle once more. That's going to increase competition massively and boost your sale price. However, if you are a seller that's looking at doing a simultaneous sale and purchase in this market, you might want to consider that right now is a good time to be doing that. You can likely sell your home. We just covered that it's going to take you about 3 weeks to get a contract if you're priced right. And there's a good chance of you getting the home that you want on the other side of that transaction when you buy a home too. Buyers in this market who can afford to buy at 7% mortgage rates should do so. Don't take it for granted that homes will be easy to get when rates have a 5 handle. Just look at the previous segment that we covered. What happened with the spike in mortgage application rates when mortgage rates came down towards the 6% mark. There are people out there, people that are frustrated and that have been frustrated for 2 to 3 years now, but who have been unable to buy homes. Every quarter of 1% that mortgage rates drop, more and more buyers will enter the market. And more buyers means more competition, it means more lost contracts, it means higher prices. Take it from someone that was there during the height of the 2020 pandemic market boom. That is a circus you don't want to be a part of. If you can buy right now, do it. And if you're concerned about losing money on a refinance, there are lenders out there that offer to offset the cost of your refinance if you refinance with them within a certain time period. So you don't have to worry about just wasting money. You can be refinancing at your leisure when rates do come back down, rather than scrambling around trying to find a home. Now let's look at the Coeur d'Alene market and see how it compares to that national picture that we outlined before. As with Spokane sales, we are comparing actual closed sales here in October with national pending home sales from September. Actual sales were up 10.9% on a year-over-year basis, which is substantially more positive than the rest of the nation's 2.6% increase in sales. Median home prices are down 0.41% to $525,000. That's a 3.5% swing away from what the rest of the nation is doing in terms of prices here in Coeur d'Alene. There are 2,183 properties for sale, which translates to a 5.8 month supply. Again, that is above the rest of the nation's 4.3 months worth of supply, but is actually the closest I've seen Coeur d'Alene in relation to the rest of the nation's inventory for a long time. Days on market in the Coeur d'Alene area are currently 109.3 days on market, and that trend is heading back up. That is substantially above the rest of the nation's 28 days on market, and it makes it difficult to plan for just about anything. Buyers in this market that are seeking a deal should be focusing on those homes with substantial time on market, or those that need a little bit of work. Those pursuing those most desirable homes and those homes that are around the median price point need to move quickly. Those homes are still likely to attract a lot of eyeballs, and those sellers are less likely to budge on price. Sellers in this market need to be doing everything right to avoid being lost in a sea of inventory. The biggest thing is to price the home right. Just look at this list to sold ratio. Homes are selling at 93.6% of their list price, and that ratio is trending down. Pretty soon it will be 90% of their list price. Sellers need to be doing everything right. They need to be preparing their home properly for market, making sure it's clean, taking care of any of those essential maintenance items, and as I said, pricing the home right. If you need help with any of these things, please reach out to me, give me a call, and I'll be happy to come around and give you some advice on prepping that home for market. That's it for this video. I hope you gained from the video. If you did, please interact with it, like it, comment, subscribe, share it. That tells YouTube that I'm doing a good job, and they'll suggest my videos to more people, so it really does help me out. If you're looking at buying or selling in the Spokane or Coeur d'Alene area, please reach out to me. Give me a call, shoot me a text, send me an email, send me a DM on Instagram, and I'd be honored to work with you. Like I said, my name is Phil Wells, and thank you for watching.